Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hello guys, good morning and welcome to a new trading week. This is the London session open and this is your host Saif Qaddoura. Hope everything is well. We'll go through the high impact news calendar and then day by day, of course, and then we'll move to the charts and see how we can prepare for the next week. Good morning Shivam, good morning Shishi. All right, so let's get to it. We start with today. Today we have the 10-year note auction that's coming from the US. We'll see how this one turns out. This might not have an impact on the markets that we trade on Tradin. It will be the most of that impact will go towards the bond market. Since we're not expecting to see any rate cuts in this month or during this month, we have an interest rate decision on January 28th. The expectations so far are most likely there will not be a rate cut. So I expect this number to come in, like the actual number to come in somewhere around the previous, maybe a little bit higher, like 4.2, 4.19. So that's it for Monday. Then we move to Tuesday. And on Tuesday, we have a big day. We have the core CPI and CPI numbers coming from the US, all for the month of December. We have the yearly CPI, the monthly, and the core CPI. So the core CPI is expected to tick up slightly to 0.3%. That's the monthly CPI. The core CPI, of course, excluding food and energy. As for the monthly CPI, it is expected to remain flat, so no change. We'll see how that one goes. If this comes in higher than expected, we will see strength in the dollar. If it comes in lower, we will see negativity on the dollar. As for the yearly CPI, it is expected also to remain flat, so at 2.7. The forecast is also 2.7. Just to remind you, the inflation target for the Fed is 2%. So they're not very far off their target, which is 2%. But we're expecting to see higher inflation given all the tariffs and all the geopolitics going around, and now very recently the oil situation between the US and Venezuela, and also the other producing countries and producing and exporting countries situation when it comes to oil. So let's see how that turns out. But if it comes in higher, we expect positivity on the dollar, because it means that they will keep rates higher for longer to fight this inflation and bring it down to 2%. If not, if we see like lower, it means that inflation is easing steadily, and we have a good steady pace of slowing down. And we will this will give the Fed more room to cut rates if needed to boost the economy. Then we have new home sales, which is the previous was 800,000. The forecast is actually a big drop to 715,000. That's for the month of October. This number was delayed because of the government shutdown, if you remember. And then we have the 30-year bond auction. Similarly to the 10-year auction, 10-year note auction. So because we're not expecting to see any rate cuts, the actual number will come very close, or I'm expecting it to come very close to this number, which is 4.773. So we might see 4.8, 4.82, something of that, something like close to that. Good morning to you too. Hope you are well too. Hello, nice seeing you again. Thank you very much. Nice to have you. How do you trade during all-time highs? How do you know the market continues or reverses? We're going to get to that once we move to the charts. Hi, Zayan. How are you? So, okay, that's for Tuesday. We move now to Wednesday. Wednesday, we have also numbers coming from the US, a lot of data coming from the US. So we have the core retail sales on Wednesday. The previous is 0.4. The forecast is also 0.4%. If the actual comes in higher, that's positive for the dollar. If it comes in lower, it means negative for the dollar because retail sales is one of the most important numbers. It shows the consumer confidence in the US economy. And when people are confident, they buy more and they spend more. So the core retail sales is an important number. If we see a positive or like a higher than expected reading, we will see positivity on the dollar, which we will go to the DXY chart in a bit and see how that aligns. Then we have the PPI. The previous reading was at 0.3%. That's the producer's price index. For the month of November, of course. So we'll see how that number turns out. But if it comes in higher than the previous, that's positive. Lower, that's negative for the USD. We saw the core retail sales. Now let's take a look at the retail sales. The previous is 0.0%. The forecast is 0.4%. So an improvement on the retail sales number. This shows a positivity on the dollar and more confidence in the US economy by the American consumer. So if this comes in higher than this, we will see positivity. If not, we will see negativity on the dollar if it comes in lower than 0.4%. So the expectations this week are mostly pro-US dollar. So they are somehow in favor of the US dollar, okay? So we'll see in a bit how that aligns with technical analysis. Then we have the existing home sales. We had new home sales on Tuesday. Now, existing home sales, 4.13 million. The forecast is 4.24. So an increase, which is positive for the US economy. It means people are spending and buying houses and exchanging houses. So there is a circulation of money in the economy. All right. And then we have the crude oil inventories. The previous reading for last week was minus 3.832 million barrels. So that's a shortage, mainly because of the supply shock after the oil situation between Venezuela and the US, because people are now scared to provide or like to ship oil to the US because it might just like go crazy and start like oil prices might start going up really hard if this doesn't get resolved soon. So that's why the supply is not keeping up with demand. That's why we saw this shortage. Okay. There is tension there. Yes, there is. Okay. Then we move to Thursday, January 15th. We have the GDP number coming from the UK. So the previous was minus 0.1%. That's a contraction in the economy. The forecast is 0%. So no change, no growth, no contraction. If the actual comes in higher, that's positive for the GDP. If it comes in lower or as the previous, it will show more contraction and a higher probability of a recession. So guys, a recession happens when you see 3 consecutive quarters of negative growth, or which is not, there's no such thing as negative growth, it's like contraction. So you see minus 0.1%. The quarter after, we'll see 0.1% or minus 0.1%. If that happens for 3 consecutive quarters, that's a technical recession. So the UK is very close to that. All right, so the initial jobless claims, we have the initial jobless claims after it on Thursday. So the previous is 208,000 jobless claims. The forecast is a slight uh, increase of 210,000 jobless claims this week. If it comes in higher, that's negative for the jobs market. It means that more people are claiming to be jobless. If it comes in lower, it means that the jobs market is still solid and hiring is ticking higher. And then we have the Philadelphia Fed Manufacturing Index. The previous was minus 8.8%. The forecast is minus 2.8%, so 2.9%. Sorry, so that's an improvement. As long as we're in the minus, it's in the contraction territory. So we will see lower and lower US dollar, and like that's negative for the US dollar in general. Okay, so the S&P Global Manufacturing PMI, the previous was 52.2. If this comes in higher, that's positive for the USD. If it comes in lower, that's negative for the USD. As long as it stays above 50, that's in the expansion territory. It means that the global manufacturing sector is growing. If it comes in lower than 50, it means that the global manufacturing sector is contracting. So that's negative for the US dollar and the global manufacturing sector. Now we move to Friday. We only have one data point, which is the German CPI for the month of December. The previous is 0%, and the forecast is 0%. So that's what's it called? A flat expectation that the CPI or the inflation in Germany will stay the same. It will not go higher. If the actual comes in higher, that's positive for euro because it means they need to keep rates higher. If it comes in lower, it means that they can't. It would be negative for the euro because it means that they have room to cut rates if they want to, or if they want to boost the economy, which is not doing very well in Europe. So that's it for the high impact news. A side note, very recently, like close to the weekend, last weekend, we saw, or like the Doomsday aircraft. That's that's a plane for the US, which can like accommodate like 100 people and can fly over like 11,000 miles per trip. So what they use this plane in times of crises. The US like most important officials, including the president, of course, if there's a war or anything, they just go on that plane and manage that war from above. They just like keep flying above the US or like safe places or safe countries, and they manage everything from there. So that aircraft, which is the Doomsday aircraft, was recently seen in Los Angeles airport. And the last time they saw this was 51 years ago. The last time it's been like seen in public, it's been like 51 years ago. So it makes a lot of sense to wake up this week and see gold making new all-time highs and silver making new all-time highs and safe havens gaining momentum, because this doesn't look good. What's happening now and the intentions of the US are like, they look like they're not on the friendly side. So that's why we see and we know that the US is preparing for something, which means more upside on the gold and silver, and safe havens in general. Um, so let's hope for the best. But I wanted to give you this piece of information in case you didn't know what drove the market this high at the very open of this week's trading sessions. All right. So now I think it's time to move to the charts. Let's stop this share and share the charts. All right. Okay. Okay. So we start as always with the DXY. Last week closed somehow bullish. It closed above this area, which is the 99. Now we're retesting the 98.7. If that support holds, we might see it go further towards the 100 level. That's on the weekly chart. Let's check the daily chart. Okay, so on the daily chart, so far, we have something like we have an engulfing candle in the making. It's not confirmed yet. We need to see it close first. But so far, we see like an engulfing candle breaking Friday's low. And it's happening on a very important trend line, which is the last trend line or last downtrend line we have on the DXY. If it breaks above and we have a retest from the outside and a failure swing, we might be seeing higher highs on the DXY, which is the US dollar, and we might see it go toward this area next, which is 104.6, which would mean negativity for everything else. But it's still too early to decide. We will need to see how this closes today. If it closes like this, then we continue the downtrend. If it closes above and we see more bullish signs, it might be the reversal of the DXY from a downtrend now to finally an uptrend. Okay, so that's for the DXY. Let's check the euro. The euro is the exact opposite. We have this area which acted as support in the past, this area, and now it got rejected from it pretty hard, and we see a bullish engulfing in the making. Like from what I see, it should be like it should continue going up, and DXY should continue going down. But like we trade what we see, we don't trade what we feel. So from what I see so far, it's still going up. Although I don't have a very good feeling about the US dollar. That is, it's going to continue going down. I think we might, because like the US dollar is considered a safe haven somehow. Okay, so people run to the US dollar or cash in times of distress and in times of uncertainty. So what's happening here is that we see it's still early in the week to decide, but so far we see the euro rejecting strongly from the zone which acted as a support or acted as a resistance in the past, and now is acting as support. So resistance turned into support. Didn't know that information because I don't watch news. In any case, news give me stress. I don't know. I'm running for something in person, but I don't know how to act. Okay. Love that slogan. Thank you. You can use it. No copyright on that one. I get out of trades during high impact news, and after investing, I turn off all the chaos. Zayan, I'm not sure I understand what's happening with you. If you can like give me more information or more explanation, I can help. So yeah, regardless of not feeling that the US dollar might continue going down and feeling that it might start going up, so far we're still in a downtrend on the dollar and an uptrend on the Euro USD. So we trade that and we stick to that as long as the trend holds. Okay. Now, what I can tell you about today is that, or about the euro and the USD today, is that you need to watch how this day closes. If we close as an engulfing, that might be a sign that the euro is continuing upwards and the DXY is continuing downwards. Okay. Okay, so we're done with the euro. Now we move to the GBP USD. Now, remember when I told you, like, while we were going through the economic calendar, I told you almost every data point is in favor of the US dollar, right? So that adds more uncertainty, in my opinion, to the dollar situation, and that it might reverse upwards. But so far, we saw the DXY having, like, forming an engulfing candle, a bearish engulfing, Euro USD forming a bullish engulfing, and now the GBP USD is forming a bullish engulfing. So depending on that, and from a very important point, which is the 200-day moving average and the 126-day moving average, two very important levels. It got rejected from there, and we might see more upside on the GBP USD and more upside on the Euro USD and more downside on the DXY. So let's take a look at the USD JPY. Now on the USD JPY, we had, like, we're almost at our target. We reached well, actually we're on target, which is 158. We've been saying that it will reach 158 since it was here. And even when it broke here and like started retesting around 151, we said that now we're, like, nothing can stop us all the way to 158. So that's what's happening now. We have one more obstacle on the way, which is 159. If we break that, the next target is around 161, or let's say 162. That's the real obstacle on the way. That's for I get out of trades. Okay, let me read this real quick. I get out of trades during high impact news, and after. Celestine, what do you mean? Your favorite pair? Which one? GBP USD? Now, Zayan, if you're in trades before news and, like, you have a clear vision of where you want the price to go, you don't need to exit unless you're, like, day trading or scalping. Scalping, yeah, that could hurt you. You need to get out of the trades. But if you're, like, swing trading, high impact news shouldn't have, like, any impact on your trades. Because your stop losses are, like, further than what they would be if you were scalping. So depending on your trading style, if you're scalping or day trading, definitely getting out of trades during high impact news is the wise thing to do. And after, like, the news, or the piece of news gets absorbed in the market, you can go back to trading. But if you're swing trading, you don't need to get out of trades as long as you have your stops and you have your TPs. Nothing to worry about. Okay, yeah, okay. USD JPY. So tell us since it's your favorite, tell us what you think about it. All right. Now we move to gold. Now, thankfully, I woke up with a TP. Now that's a full TP on gold here. Which is around, which was at 4,560. This got filled, so let's remove it. And now we're still in an uptrend on the gold. Okay, so we have this. Let me take a look. Yeah, we're still doing fine. Yeah. Okay, so let's go to the monthly. The monthly, we have a higher high, of course, obviously. We have an all-time high. And on the weekly, it's very bullish, and it closed bullish last week above 500, and now we made a new all-time high of $4,600 per ounce. On the daily, as I told you, it's still very bullish. We have a very clean uptrend. On the 4 hours, we are still in an uptrend. No signs of weakness whatsoever. On the hourly, still in a big uptrend. Let me check. And now we are forming on lower time frames. We're forming something we call a bullish pennant. So expect to see something like this from here. So we might see the 4,670 very soon, because this pattern tells you that once this is broken, the flagpole is to be replicated after the breakout. So our target is almost $90 from here. I hope you guys can catch that trade. You know what? Like the analysis this week, or the preparation for this week, is pretty easy. Like it's very obvious what's going to happen. Like in terms of technicals, I'm talking. We have some contradiction with the fundamentals. That's why we need to pay attention to any unusual moves or reversal moves. But overall, it's like DXY is still going down, Euro is still going up, GBP is still going up, and the gold and silver are still going up. So and USD JPY, since we achieved that target of 158, and we have like a negative bearish, or like a bearish engulfing candle on the DXY, we might see it reverse from there if that weakness in the USD persists. Okay. Thank you, Zayan. Thank you. How to trade an all-time highs. Okay. Now, I know that what I will say now might feel counterintuitive. People usually say that, or usually think that since it's at an all-time high, let me sell. Like, how far can it go further? But me, for myself, if it's making all-time highs, I buy. I keep buying, because that's what institutions do. They keep buying from retail traders who keep selling at all-time highs, and you keep seeing all-time highs over and over again. If you ever noticed, whenever we see an all-time high, it's not just one all-time high and then it drops for weeks. No, what happens is you make an all-time high, and then you see another all-time high after a couple of hours, and then you see another all-time high after a couple of days, and then you see another all-time high after a week. So it keeps building and making all-time highs, and it keeps faking out and tricking retail traders into selling, while what they should be doing is actually buying on all-time highs. But of course, not randomly. You need to have stops, and you need to have a strategy. Let me read this. I hope this answered your question. Let me read this one. Hello, good morning, and Happy New Year. Same to you. Hope your holiday was nice. Yes, thank you so much for all you do. I really appreciate the value I'm getting here. I appreciate having you with us. Thank you very much, Ali. All right. So, guys, do you have any questions? Any questions at all, please? Take a look at lower time frames. And this might even be not a pennant, but actually a flag. Yeah, that looks more like a flag, or Okay, so we have a very obvious stop here, which might get swept, but anywhere around 575, I'm a buyer, with my stops below here. But of course, that's not like just like a hard number. Whenever like it reaches 575, I'm going in. No, it's actually waiting for a setup around that area. So if you don't get a setup, you don't buy, right? Um, exactly what's currently happening on gold a few months ago. Thanks a lot for explanation. Very happy that I answered you. My bias on USD JPY is a buy continuation because it's bullish, but have to wait for a valid entry. That's Celestine's answer on USD JPY because I asked for insight. So thank you for that. Should we keep taking buy on gold for scalping? Yes. Like the safest thing to do is to buy gold, even if you're scalping, because now you're in a very aggressive uptrend and the momentum is positive. So just ride the wave instead of just trying to fight or swim against the stream. Okay. What is your view on paper trading for a new trader? Is it a good idea to paper trade for a new trader? Of course, that's the most important. That's part of the recipe of becoming a trader is paper trading or like demo trading because it teaches you how to read charts and like understand your emotions while you're in the trade. Not only that, like the emotions part is not entirely true because you need to have some skin in the game to feel the emotions that traders usually feel. But what I mean by emotions, I mean that like the frustration that something worked or didn't work. You use it for back testing. You use it for testing your strategy and making sure that you have an edge and your edge works. So paper trading is one of the most important things a new trader has to do. Any insight on Bitcoin all-time high, like you share insight on gold? Let me go check. Okay, so it's holding up. Bitcoin is actually holding up, which is something we discussed last week during the Monday live stream. So it's holding up. It got rejected from a very important point and still holding up above the long-term uptrend. So now it came back to retest that area and then got rejected again. But still, I'm still waiting for 95 to get broken. We almost broke it and we went down like it wicked slightly above it, but that's not enough. I want to see a close above this area. So this might be like Bitcoin giving us clues that it will continue going up. It left a mark here that I'm going back up here, but I need to collect some liquidity. But once that's broken and we have a break above and the retest on that same level, Bitcoin is going to continue going up. I buy gold metals during all-time highs, but I don't go with other assets. Whatever works for you, my friend. Whatever works for you. Okay. Any more questions? Any more questions before we call it a day? Or no, not call it a day. Call it a stream. I have a question. Could you discuss a bit on Japan economy, like the fundamental analysis of it at the moment? Okay, so Japan for decades has been in an ultra loose monetary policy. What does that mean? It means that they kept their inflation or they kept their interest rates very low. Like sometime in the past, not very long time ago, their interest rates were in the minus. So if you place a deposit in a bank, you will have to pay on that deposit. Not like unlike the usual, which like if you put money in the bank, you get interest. But no, it was in the minus. So if you put money in the bank, if you stop spending and like try to save, they will charge you for it. Why? Because they needed for a very long time. They are facing something called disinflation. Disinflation is the opposite of inflation. Prices are going down, and like when you hear it the first time, you say like, okay, prices are low. Why is that a problem? It's a problem for the whole economy. Why? Because producers get discouraged by lower prices, so you will get less variety of services and products, and businesses will start losing, so they will go out of business, as we saw happened in Nissan, for example, which is the car manufacturer, very big or very important player in the auto world. Um, it filed for bankruptcy multiple times because of that, because like the prices are too low and they're facing this inflation, so they're not making enough money to continue going and producing and then exporting and bringing more money into Japan. So they kept that policy for years, and very recently they went above the 0%. So it became 0.1%, and now very recently it became 0.5% interest on the JPY. They expected to see like strength on JPY, but it's not enough. That's why we're seeing JPY dropping even further and further. So that's like Japan's economy in a nutshell. They're facing this inflation. They kept their monetary policy and interest rates very low, like to boost the economy, but that obviously didn't work. And now the JPY is dropping heavily, which made them actually raise interest rates to make it more attractive. But what's happening now, it's facing, or like the problem is that the JPY is facing something called the carry trade. So the carry trade is basically when you like borrow a currency and exchange it with a high yielding currency. So you borrow yen, which like makes you pay 0.5%, and then you go like convert those yens into US dollars and like buy a US dollar investment, like a government bond, for example, which pays you 4% or 4.5%. So you like the differential is the 4%, 4.5 minus the 0.5. So you get 4%. So as long as the JPY is weak, you get paid more and more, and your money stays like you're like basically making money off of a weak currency, because the divergence or like differential between the Japanese monetary policy and the American monetary policy is big. So they do carry trades, and as long as you do carry trades have been known to cause or like to fuel um, long-term trends in FX. So that's what's happening in the JPY. I hope this answers your question. Can you break down DAX? Let me check in a second. Due to geopolitical issues, gold will make all-time high again and again. What's your opinion? Yeah, I agree. Gold will continue making all-time highs until it doesn't. As long as it's making all-time highs, we go with the trend. You are very welcome. Okay, so let's end with the DAX. Let's take a look at the DAX. So that's the German 40, all-time highs, of course. This is done. This is old. Let me remove that. Okay, so now we're at an all-time high. Very similarly, the stock market, the German stock market is going crazy, unlike the German economy, to be honest. So like, for me, that's not very representative of what's happening on like in reality in the German economy. Let me check. Yeah, it's still very, very bullish. So same as gold, I would continue going up or like buying DAX as long as it shows me strength. But we have early signs of weakness on the hourly time frame, which is the negative divergence. We have higher highs, but the MACD is showing lower highs, which means that the momentum of the like this wave, this current wave is fading. Pardon me. But on higher time frames, like the 4 hours, and no problem, we're still good. So we might like drop a couple of 100 points and then continue going up. So that's it on the DAX. Do you need anything else? So I think that's it for today, guys. I hope this was helpful. Be prepared for the week ahead. I hope the insights I brought today would be helpful in your trading week ahead. So take care of yourselves, and I'll see you on the next one. Take care and trade in. Bye bye.